a trading standpoint, you have to position yourself like it's October '99. I don't see why you would do anything but that. And remember, the NASDAQ doubled between the first week of October '99 and March of 2000. So if it looks like a duck and quacks like a duck, it's probably not a chicken, right?
Everyone is losing their minds over AI. Nvidia is worth more than Amazon. OpenAI is valued higher than most countries' GDP. Billions are being poured into AI startups that don't even make money. And now, the same people who built this AI empire are warning us it's a bubble. Sam Altman, the founder of ChatGPT, says it looks like the AI boom is turning into a bubble. Mark Zuckerberg agrees. Even billionaire investors like Paul Tudor Jones say it looks just like 2001 all over again. So the question isn't if this pops, it's how bad it gets when it does. In the last 5 years, corporate investment in AI jumped from $103 billion to over $250 billion. That's not retail money, that's big tech, hedge funds, and venture capital. Everyone wants a piece of the next ChatGPT or the next Nvidia, because whoever controls AI controls the future economy. But that's exactly what people said about the internet in 1999. Everyone thought they'd get rich. Then came the crash. Back in 2000, the NASDAQ was trading at 70 times earnings. Companies with no profits were worth billions. Today, we're halfway there, around 35 times earnings, still far above the long-term average of 20. Nvidia trades at 50 times. Some AI startups are valued at 30 times revenue, not profit, revenue. Sound familiar? During the dot-com bubble, tech made up 1/3 of the S&P 500. Now, just 7 companies, the Magnificent Seven, make up 34%. That's not diversification, that's monopoly on steroids. The craziest part? There's a literal feedback loop of money between AI giants. OpenAI raises billions. They pay Oracle for cloud services. Oracle uses Nvidia chips. Nvidia reinvests in OpenAI. It's an infinite money glitch, a self-feeding cycle where valuations inflate each other without any real profit increase. It's like Paul investing $100 in John, John investing $100 in Bob, and Bob investing $100 back into Paul, and everyone thinks they're richer. Here's the twist. The dot-com bubble burst because of rising interest rates. The money stopped flowing. But today, rates are falling again. The Fed just made its first rate cut of 2025 and promised more in 2026. Cheaper money means more borrowing. More borrowing means more speculation. More speculation means an even bigger bubble. So, ironically, lower interest rates don't kill bubbles, they feed them. Which means the AI bubble could grow much, much bigger before it explodes. So what happens when it pops? Panic, overselling, opportunity, profit. Or as the minority mindset puts it, P.O.O.P. It happened in 2000. Amazon dropped 90%. In 2008, real estate collapsed and smart investors got rich buying foreclosures. In 2020, Bitcoin fell 50%, then hit all-time highs. History doesn't repeat, it rhymes. And every rhyme sounds like the same 4 letters, P-O-O-P. P.O.O.P. When fear takes over, wealth transfers from the emotional to the prepared. We've seen this movie before. New technology, wild promises, easy money. Every time, the names change, but the story stays the same. The AI bubble will pop. The only question is, will you panic or will you profit? Subscribe if you want to understand what's really happening behind the hype before the bubble bursts. Everyone thinks they'll see the crash coming, but that's not how bubbles work. They don't pop. They leak slowly until one day they explode all at once. The truth is, most people won't lose money because of AI. They'll lose it because of greed, timing, and distraction. But the few who understand how market psychology actually works, they'll be the ones quietly buying when everyone else is panicking. And in the next video, we'll break down exactly how to spot those turning points before they happen. So if you're serious about building wealth in a world addicted to hype, don't just watch the headlines. Watch this. And if you want to get rich, watch this.